Hi everybody, if you're an Indian, you know how much Indians love buying gold, right?
Gold is big business in India.
Just as part of the American dream is to own a home, the dream in India is to own gold.
There is about 20,000 metric tons of gold stashed away in India's households and temples.
India loves gold so much that we are the second largest consumers of gold in the world. In fact, Indians own so much gold that it is more than the gold held by the central banks of the United States, Germany, Italy, France and Russia combined. While the US holds only 8,100 tons of gold, Russia holds 2,332 tons, whereas Indian consumers hold 21,000 tons of gold. Now, in the past 6 months, if you've been following the markets, something crazy has been happening.
The Indian stock market has hit $5 trillion.
India's stock market overtook Hong Kong's.
In the Indian markets, the gold price is at an all-time high above 70,000 rupees.
Gold prices are at historic highs.
While Sensex gave a return of 8.33%, Nifty gave a return of 9.92%, whereas the price of gold has shot up by a staggering 16.16%. You know why this is extremely strange? Because suddenly in the past 2 years, the central banks all around the world are suddenly buying tons and tons of gold. In fact, recently India moved 100 tons of gold back to India from England. And while India bought 69 tons of gold, China bought 314 tons of gold, Poland in 2023 bought 130 tons of gold, Singapore bought 125 tons, and even the Czech Republic bought 75 tons of gold. So overall, there is a trend of gold stacking all across the world, and the gold prices are touching unbelievable levels. So the $1 million question over here is, why are central banks all across the world buying so much gold? What are the most important global factors that are affecting the price of gold right now? And lastly, as investors, should you consider investing in gold or not? Before we move ahead, let me introduce our education partners of today's episode, and that is Odoo. People, Odoo is the most beautiful all-in-one business management software that provides a range of applications to simplify your day-to-day business management. And as India is heading into a digital revolution and everything is moving to a digital format, document signing somehow is largely still being done on paper. And that is because there are very few secured and trusted tools for digital signature. And that is why Odoo is here to help you out. Odoo's e-sign feature allows you to sign, send and approve documents online, removing the chances of errors and hassle. By using this application, you just have to upload the document and you can select the fields of your choice like the name or the date and simply drag them anywhere on the document like shown on the screen. It enables you to create your own document templates and be more productive by sending them directly to the relevant individuals through email. The best part is you can also track the signing status by the recipients, send automatic reminders and receive notifications once the documents are signed. And the signatories can access the documents and e-sign them from any device with just a few clicks. All of this while ensuring security and keeping the data private. And you know what? This is completely free for you because Odoo gives lifetime free access for your first application on Odoo with unlimited hosting and support. So if you find this useful, check out the link in the description and download Odoo now. Chalo, let's start from the very basics and understand why is gold such an important commodity in the world economy. This is a story that dates back to 1940s, and by this time, the world had already witnessed World War I and World War II was at its peak.
The world's most hated treaty, the Treaty of Versailles, thus starting World War II in 1939.
The whole world is against Hitler and Hitlerism.
The worst war in human history.
And as we all know, the British Empire back then was a superpower with their vast colonies all across the world. But by the time they fought World War I and World War II, most of their wealth had deteriorated. In fact, by the early 1940s, the condition of the British economy was so bad that their debt to GDP percentage went up from 25% in 1914 to 220% in 1920 to 270% in 1942. And similar was the case with all major countries across the world, including France and Soviet Union. But the catch over here was that the United States government was so smart that they engaged in these wars first as war merchants and then as participants.
America appeared as a land of plenty. Undamaged by the war, it was more prosperous than a cheap fuel kept the boom running. It helped that America now dominated the world's banking and trading system.
With increased capital, production capacity, and new technology, American industry was in a position to dominate the post-war domestic and world markets.
Now, what does this mean? While all the big empires were busy fighting and dedicated all their manpower and resources to World War, the United States used all of its capital and manpower into becoming a major supplier of cotton, wheat, brass, rubber, automobiles, machinery, and thousands of goods to these major countries across the world. And they supplied these goods to all the richest countries across the world. As a result, the United States experienced one of the greatest economic booms in the world. The total value of US exports grew from just 2.4 billion in 1913 to 6.2 billion in 1917. And you know what? The same thing happened in World War II also, wherein the US became a war merchant and entered the war only after Pearl Harbor. I'll explain this in depth later, but for now all you need to know is that by conducting a business out of two of the most expensive wars in world history, the United States made so much money that while every other country's economy was devastated, the United States had 75%. I repeat, the United States had 75% of the entire world's monetary gold. And if you look at this graph, you will see that their gold reserves went up from just about 2,000 tons in 1910 to almost 20,000 tons in 1940. This is how the United States became a super rich country. And here's where the US took the opportunity to gather 44 countries all across the world to sign something called the Bretton Woods Agreement in 1944.
Delegates from the 44 allied nations gathered in Bretton Woods in New Hampshire to negotiate international financial order and economic cooperation following this, what's now known as the Bretton Woods Agreement.
These meetings are designed to promote trade in the post-war world and to create a foundation for lasting peace.
And in this agreement, 44 countries agreed to peg their currency against the US dollar, and the US dollar was ultimately pegged to gold. Now the question is, why did these countries sign the Bretton Woods Agreement and what was their benefit? Well, firstly, the Bretton Woods Agreement said that they would back the US dollars with gold such that 1 ounce of gold would be worth $35, as in 28.35 grams of gold would be worth $35. And they said that if you own the US dollars and you come to us, we would redeem its value in gold, as in we would exchange the US dollars for gold. So this way, when Indonesia got $1 million from Pakistan, even if Indonesia did not trust Pakistan, they knew for sure that the $1 million US that they got could be exchanged for gold with the United States. So it was definitely worthy because the US dollar acted as an instrument of trust for trade. Otherwise, if they did their trade with Pakistani rupee, then what is the problem? Today, Pakistani rupee might be worth buying 1 gram of gold, but tomorrow, Pakistan might just print more money and declare that 1 gram of gold is worth 20,000 Pakistani rupee. So do you realize what would happen? The entire value of trade would completely collapse. Moreover, in spite of all this, if Indonesia ends up using the Pakistani rupee and stacks up Pakistani rupee, if other countries do not trust Pakistan's economy, then that money again cannot be used to trade with other countries at all. And this is where again the US dollar acted as a common instrument of trust to trade with multiple countries all across the world. So after the Bretton Woods Agreement, if the same transaction happened in US dollars, the US guaranteed the value of dollars with gold. So you could trade with any country with the US dollars and be rest assured that it could be used to trade with any other country. This is how the US dollar became a currency of trust. And secondly, Bretton Woods Agreement led to the formation of two major organizations. The first was the World Bank and the second was the International Monetary Fund, or IMF. And since most of these countries were devastated by war, they desperately needed loans to rebuild their economy. So with the funding of the United States, as you can see, the World Bank issued huge sums of loans to help these countries get back on track. And thirdly, they had the benefit of IMF facilities. So while the World Bank gave out long-term loans for development, the IMF keeps track of the global economy, it assists policymakers, and most importantly, it lends money to countries with balance of payment difficulties. This is the reason why countries like Pakistan and Sri Lanka sought help from the IMF to come out of economic crisis. This is how the Bretton Woods Agreement sealed the importance of the US dollar and gave the United States a huge leverage over other countries. This was the first phase of establishment of dollar dominance. If this is very clear to you, let's move to the second phase, and that is the love affair of the US dollar with oil. This is again a story that dates back to World War II, and during this time, while Russia, Britain and the US were busy fighting Germany, Italy and Japan, the Arabs in Saudi Arabia were just chilling in the desert and had nothing to do with the war. In fact, they didn't even know that they were sitting on the largest black gold mine in the world. And during that time, that is in the 1930s and 40s, the US and British companies were surveying and digging the entire world for oil, and they had both the technology to extract oil and the acumen to use it for development. This is when in 1938, an American-owned oil well in Saudi Arabia drilled into a huge source of oil reserve.
After 3 years of slogging and 10 wells drilled, no oil. Number 1 produced mostly gas. Number 2, more water than oil. Number 3, number 4, almost dry.
But when I opened my note, it said, "We have discovered oil. Bon voyage."
Now there would be more wells, more workers pouring into Dhahran, and a king would come from Riyadh to see for himself.
Meanwhile, the Saudis were not so rich back then because they had just started their oil production. But during the war, Italy had dropped multiple bombs on Saudi Arabia to target the American facilities. And because of this attack, Saudi Arabia struggled to produce oil at full capacity. So during this time, the Saudis desperately needed protection. And this is when Franklin Roosevelt, who was the president of the US back then, he saw insane levels of development all across the world during war. And this is when he realized that the key to this and the next 5 decades of world development lies in just one commodity, and that is oil. So you know what? He held one of the most important meetings in world history with the king of Saudi Arabia, and he made a deal in 1945 that would change the fortunes of the US dollar forever. The question is, what was this deal? Very simple. The United States offered to protect Saudi Arabia from any future attack and provide them with all the military equipments. But in exchange, he asked the Saudi king to sell oil primarily in US dollars. And guess what? The Saudi well that the Americans were digging for was the largest oil well in the world. And from here onwards, the rise of the Middle East started. This is the reason why by 1960s, when the oil producing countries formed the OPEC, all the oil countries started selling oil in dollars. Now the question over here is, why was selling oil in dollars such a big deal, and how did this meeting make the US dollar the most powerful currency in the world? Well, this is where the third phase of the rise of US dollar comes in, where dollar became the dollar mafia. Now, do you remember what did the Bretton Woods Agreement say? If you peg your currency to the US dollar, tomorrow when you get US dollars, America would redeem its value in gold, right? But guess what? By 1970s, the US economy had reached such a pathetic state that the gold reserves had fallen from 22,000 tons in 1950 to just 10,000 tons in 1970. And this was because of multiple reasons like Vietnam War, gold price hikes, US liabilities, etc. But long story short, the US gold reserves were so low that they could no longer afford to keep exchanging gold for US dollars. And this is when President Richard Nixon declared a temporary suspension of the dollar's convertibility into gold, and the Bretton Woods system had collapsed in 1973.
The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
So now countries were free to choose any exchange arrangement for their currency except pegging its value to the price of gold. So now, one of the most important factors for the value of the currency was not gold, but its application, as in what could your currency buy in the global market and from which country. And if you remember from our phase 2 story, what could the US dollar buy you in the global market? It could buy you the most valuable commodity of the century, which was oil. So most of the countries by default held on to their forex reserves in the US dollar so that they could buy oil from the Arabs. But at the same time, other currencies like euro, yen and yuan began to rise in the world trade. This is a story of how the US dollar was first backed by gold, then it got backed by oil, and now the US dollar is not backed by any commodity but by oil trade. This is the reason why all countries across the world have their dollar reserves in the form of US Treasury bonds. If you look at this graph, Japan holds $1.1 trillion in US bonds, China holds $797 billion, and India holds $236 billion in US Treasury bonds. But now the question over here is, if all the countries in the world could buy oil in dollars and the US dollar has been used for such a long time, then why are these countries suddenly buying so much gold? Well, firstly, if you look at what happened during the Russia-Ukraine war, as soon as the war started, the United States froze $300 billion of Russian assets all across the West. And most of this money was Russian money stored in US dollars. Similarly, even for Afghanistan, after Taliban took over, the United States froze $7 billion of their reserves. So after 2022, China got worried because just like Russia, the US could even seal China's $797 billion in US Treasury bonds that could make things terrible for China. Why? Because even the US and China are engaged in a trade war, and China is now very keen to occupy Taiwan. So if you look at this graph, it's only after the Russia-Ukraine war that China has started buying an enormous amount of gold. And the same is the case with Czech Republic, Poland and Singapore. In fact, Poland is even more cautious because it is very close to Ukraine. Now, this is not to say that all countries are suddenly abandoning the US dollar, but we can definitely say that the confidence of the world in the US dollar is decreasing slowly and steadily. It is so slow and steady that it might take another 50 years for another currency to become the reserve currency of the world. If you look at this graph, the reserve currency market share for the US dollar has decreased from 75% in 1970 to 59% in 2022. So long story short, gold prices are increasing because of the US freezing Russian reserves, which is pushing other countries to diversify into gold. But now the question over here is, India or China are not in war with the US, right? Then why are India, China and so many other countries de-risking themselves from the US dollar when they're not engaged in any kind of war with the US? Well, this is what brings me to the second reason for dollar de-risking, which is the United States' bad habit of reckless money printing. If you look at history, you will see that the United States has frequently engaged in money printing. For example, if you look at this chart, the United States has been steadily printing a lot of money. They printed almost $1 trillion in 2008 when the US was in recession. They printed $4 trillion in 2020, and again, they printed just above $2 trillion in 2021. So if you see, 2020 and 2021 combined, the United States printed so much money that the printed money alone was equal to twice the GDP of India back then. So because of this, what happens? Inflation happens all across the world and the value of the US dollar goes down. So today, if $100 could buy you 25 burgers, after inflation, you could just buy 20 burgers. Now, do you remember why the countries chose the US dollar as a reserve currency? Because at any given point in time, they could use the US dollar to exchange it for gold. So it was for preservation of value, right? And why couldn't they trust Pakistan? Because Pakistan could suddenly print money and the value of their currency might drop, right? Well, guess what? That is exactly what the US is doing right now, which is printing money and decreasing the value of other countries' dollars. Which means what? If China has 3.2 trillion in reserves and the US prints money, the value of this Chinese dollar reserve will go down. And here's why, ladies and gentlemen, gold comes into the equation. When it comes to gold, nobody can print or manufacture gold, right? So the value of gold is always preserved. This is the second reason why countries all across the world are buying gold, which is the US dollar printing that is degrading their reserves. In fact, gold is available in such limited quantities that you would be shocked to know that the entire world's gold, I repeat, the entire world's gold can fit in a 23 by 23 by 23 meter cube. So with such limited availability, the value of gold is always preserved. If this is very clear to you, let's come to the third reason, and that is the massive consumption from both Indian and Chinese consumers. For India, the story of gold is pretty obvious. As our per capita income increases, we will keep on buying gold for festivals and for wealth creation. This is irrespective of what happens in our market. But you know what, guys? For China, the story is a little interesting. It can be summarized in 2 points. Firstly, as we all know, China is witnessing a real estate bubble crash. Long story short, the Chinese government tried to boost the real estate in such a way that lots of builders built a lot of buildings and people of China bought houses in these buildings for investment purposes. But suddenly they realized that there is an oversupply of houses. So suddenly the real estate market of China has come crashing down. Secondly, if you see the Chinese stock market is also not giving enough returns. In fact, if you look at this graph, the Shanghai index has only appreciated by 5.87% in the past 5 years. Whereas if you look at the Indian Sensex, it has appreciated by 94.4% and the S&P index has appreciated by 85.2%. This is the reason why the Chinese people are investing a lot of money in gold. It's like you bought a flat in Mumbai for 1 crore rupees, but after 3 years, its value has come down to 70 lakh rupees. At the same time, it's like your portfolio has only appreciated by 6% in the past 5 years. So now you tell me, if real estate is down and the stock market is sluggish, what would you do? You would invest in gold, right? Well, that is exactly what the Chinese are doing. And if you look at their consumption, it's massive. If you look at this graph, the Indian consumers bought 774 tons of gold and the Chinese consumers bought 824 tons of gold. So the Chinese and Indian consumers both bought more gold than the next 10 countries combined. And according to the World Gold Council, the Chinese consumers have started buying so much gold that the consumption has spiked from 641 tons in 2020 to 959 tons in 2023. This is the third reason why the gold prices are increasing, which is an extraordinary demand from both Indian and Chinese consumers. And the fourth reason for this price hike is investor sentiment. And if you actively invest, this is something that you will find very interesting. Look at this graph. They say that gold usually has a negative or low correlation with the stock market. In simple words, more often than not, when the stock market goes up, the price of gold goes down. And when the stock market goes down, the price of gold either goes up or it goes down by a lesser margin. To tell you about it, look at this graph. During the 1973 oil shock, when there was a recession all across the world, while the S&P went down by 13%, the gold prices shot up by 87%. Similarly, during 2001, 2008 and even in 2020 recession, while the S&P went down by 1.8%, 37% and 1.4%, the price of gold went up by 5%, 16.3% and 5.6%. And in 2022, during the Russia-Ukraine war, when the S&P went down by 19.6%, gold only went down by 2.1%. This is why they say gold has a low to negative correlation with the stock market. So whenever people see or expect a recession, gold prices are expected to go up. In fact, if you look at this graph, China bought a ton of gold even in 2008 and 2016. This is the fourth reason why the gold prices are increasing all across the world. And the last factor that affects gold prices is inflation. In simple words, when inflation spikes, just like central banks buy gold to preserve their investment, even retail investors buy gold to preserve the value of their investment. So as inflation occurs, the price of gold increases due to both inflation as well as investors shifting to gold for value. So what did we learn from all this case study? As the United States keeps printing more money, the world is slowly moving towards gold to preserve the value of its assets. Why? Because the US dollar is no longer backed with gold or anything tangible. So they can keep on printing and the value of other countries' assets will keep on degrading. Number 2, as the United States and the West froze the assets of Afghanistan and Russia, the world became more careful to diversify its investment into gold. Number 3, as the Chinese real estate market and the stock market witness stagnation, the Chinese are buying more gold for investment. As a result, the gold prices are going up. Similarly, Indians are buying a lot of gold because we have money and we just love gold. And lastly, as inflation happens, people are shifting towards gold to store the value of their wealth. As a result, again, gold prices are shooting up. These are the reasons why gold prices are shooting up all across the world. So the last question over here is, should you buy gold for investment or not? Well, no matter what happens, guys, always remember, in India, you should not react to the market and suddenly buy or sell gold or stocks. You should always consider slow and regular investment like an SIP so that you can hedge your risk with the movement of the market. And trust me, this is the best and simplest suggestion you will ever receive. That's all from my side for today, guys. If you learned something valuable, please make sure to hit the like button in order to make YouTube Baba happy. And for more such insightful business and political case studies, please subscribe to our channel. Thank you so much for watching. I will see you in the next one. Bye bye.